It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening. It's already Tuesday evening, September 22nd, 2015. In tonight's nightly newsletter, crude oil is range-bound, which means we're looking for failures and rotation from high to low, questioning all those breakouts ahead of tomorrow's inventory report. S&P is bearish and range-bound with a spike in channel to use tomorrow. We're looking forward to that. How about the gold market? The yellow metal is bearish this evening after we went from bear flag straight into bear spike in channel today. Just a little bit of craziness on the gold. And of course, the euro is bearish with a capital B, well oversold. And our plan is to stay patient, waiting for a bullish correction so we can find a little more lucrative selling opportunities going into the rest of the week. As you can see, we got a jam-packed newsletter in store for you guys and gals this evening. I appreciate you spending your valuable time with me. Before we jump into our charts, though, I do want to remind you, please make sure you're watching this video on our trading blog here at sidewaysmarkets.com. There are a few reasons why it's in your best interest to watch the video on our blog right now. Upper left-hand corner, you can find a free pass. Come out and test drive our live trade room if you're not a member of our advanced membership and you'd like to get a test drive of our live trade room. Grab your free pass, upper left-hand corner. Lower left-hand corner, we have a mailing list for our nightly newsletter. You never have to worry about missing another newsletter ever again. All I need is your name and your email address. And then make sure you check your inbox. I'm going to send you a verification email to make sure we have the right email address for you and to give me approval to keep sending them to you in the future. Right below the video tonight, we have our link to download all today's charts, all the charts you see on today's video. You can download all those charts and have them ready for tomorrow. And then, of course, over on the right-hand side, you can learn more about becoming a trial member here at School of Trade. It is not the same as our free pass. Join your trial membership, get more information about joining as a member here at School of Trade, read real member reviews, and of course, we usually have someone standing by 24/7, 365. Have to restart that software if you have any questions. All right, guys? Thanks for joining me once again. Ready to rock and roll here for our nightly newsletter. We're going to start out with crude oil. Crude oil is range bound this evening and with balanced volume ahead of tomorrow's inventory report. Our plan is to fade the range highs and lows while looking for rotation back and forth within the range. If we break out of this range, we'll then be looking for rotation up or down to the next range expansion targets above and below. Now, if you recall from last night's newsletter, we had our bullish spike and channel. Very big clue yesterday, right? And that, of course, line in the sand that we talked about in last night's newsletter held very, very nicely, but they really couldn't get it out of first gear. You can see the buyers here tried once, and now they got their second try here. And really, it's not until you take a step back for a moment, throw on some volume on here, and you begin to realize here, all right, what started out as being a very bullish week, again, I think if we would have had a little bit more success on the behalf of the buyers today, it would have been a much different story. But after seeing it try to go up, and all right, give it another try here. Now we're going into Inventory Wednesday. And again, you can see we've got a range high up around 47, a range low. That should be a range low down at 45.67. That's going to be our main bread and butter here going into tomorrow's inventory report. Now, we do get historically most Wednesdays. Wednesdays have inventories at 10:30 a.m. Eastern Time, unless, of course, Monday or Tuesday is a holiday. Then it gets pushed back to Thursday. But we do expect tomorrow to have inventories at 10:30 a.m. for all you crude traders out there. And don't forget, we do have a very specific plan of how we trade crude oil on Wednesdays. We get in early, we get out early ahead of that news, we wait for the news to come and go, and then we are very careful trading between that 10:30 and 11:30 time frame before going to lunch, because it's usually a little bit whippy and it can be very, very irrational at that time. So we have a very specific plan that we always execute on Wednesdays. Now, how do we plan on trading this tomorrow? Well, you can see, again, we have that trading range. We're going to be looking to fade all the breakouts here until proven otherwise. Bottom line, we have a measured move that we are watching overhead. That will be some additional resistance overhead, but everything else really is just range expansions. I take my trading range, copy and paste it, right? And you can see those range expansion levels going up. So my plan for tomorrow is quite simple. I'm looking for the buyers to try a few times the highs so I can sell those highs, taking profit back at the lows. Same thing down here. Sellers try a few times down here, buy those lows, target back at those range highs. Now, if we are successful after 2 attempts, 1, 2, we do expect to extend out to the next range, right? So 1, 2, extension down. This is a very simple strategy. We know the markets try twice, and we know the markets, when they range like this, we want to be suspicious of all the breakouts. Don't forget, I teach all of these range-based strategies to all of our students. You can learn more about this as a member here at School of Trade. So stick to that trading range tomorrow. Fade all those breakouts, and remember, the magic number is the number of 2 for tomorrow. And again, 10:30 a.m. for all those crude traders tomorrow for inventories. Now moving from the crude oil to the S&P 500, which is also but is bearish this evening and range bound as well, just like crude oil, with a clear spike in channel, which will keep us looking for selling opportunities after a bullish correction. Now, the spike in channel is what the most important clue is in the short term. Meanwhile, these range expansion targets are going to be what we're going to be using right in the long term this week. So I see we have a bearish trend going in. The key right now, though, that I see on this chart is that we did start the week inside of a range. We break down all it took is one try to get down to the next range. We know the market will try twice to go lower. Once, twice, couldn't get the job done. Tries again, once. Now we've got to keep going higher here for that second try. And so, of course, it appears these bulls are failing. Throw that on top of this now bearish spike in channel. Tremendous spike down. I'm not going to worry about why that happened. I know it's all over the news right now about the automakers, but I do know that all I care about is the chart, because the chart is a lot easier to understand than whatever they're trying to spin in the news media. So I see I have a spike in channel. That's why we have our A, our B, and then usually we're going to get a correction back up to the beginning of where the channel started. So really what we want to look for is for an opportunity to sell that bullish correction right back down in, right? So we'll see what this market looks like tomorrow, but that's the ideal. The ideal is I want to sell after this bullish correction. We clearly have a bearish bias on this in the short term. The spike in channel tells us. Now we're going to look for, again, like I said, that bullish correction. After we get that bullish correction, then we're looking to complete this A, B, C, D to find out what our long-term target will be later on this week. If we don't get the bearish correction, targets are going to be back at that swing low, down at the low of the, remember, range expansion. Copy and paste, copy and paste, copy and paste, copy and paste. Very, very simple analysis there. And again, I think the most important thing is if that ends up being our C point here, right, it really shouldn't, but it looks like the way the chart's looking right now, it does look like that may end up being our C point here. Connect the dots here. Start from the spike down, copy and paste, bring it on down, and that's going to put us around that 1890 area later on this week. Now all we have to do is AB equals CD. We'll leave that on. See if we can get. And again, I'm going to come back tomorrow and we'll see what this looks like as far as what the highest point of this correction looks like, right? That's the most important thing right now, because we may come in tomorrow and we may see this correction go a little bit higher and then come back. So I'll have to adjust that a little bit, right? So keep in mind that's going to be a moving target until we actually see what happens before we open up tomorrow morning. But looking like as of right now, that 1890. Now clearly that is a long, long target, especially for the S&P 500. So what I'll be looking for is to use more conservative targets, mainly these range support levels below. Swing low, range support, range support, range support on the way down. Right? Nice and easy. So, sticking to the bear side here right now on the S&P. Now that you have those levels for you. Sticking to the bear side here right now on the S&P. Scenario 1 is that we go a little bit higher, and that's really where I want to get it. That's really where I want to be looking for that sell tomorrow after that, what I call the spike and channel correction. It's just back at the beginning of where the channel begins, right? That's your typical. If we happen to fail, then we're going to go back into this range that we started the week, right? So that's why I see here we have failure targets waiting for us above. So really at this point here, I am bearish on the S&P. I'm looking for buyer failure as we go down to those bear targets waiting below. And really what I want to use here is use those range levels for tomorrow, in the essence that if we do make it all the way down to this low, I'm going to look for the buyers to try, rotate it back up, sell it back down. Buyers try once, buyers try twice, and they fail, sell it back down. And then we'll look for the rotation coming right back down. So staying to the downside right now, staying to the bear side here on the S&P, using the spike and channel correction up at 1940 area as my ultimate objective, and then using those range targets, range highs and range lows, range expansion levels, right, for the rest of our trading opportunities on Wednesday for the S&P. Looking good. Should be another interesting day here on the S&P. Here's a very easy one here, well, depending on your definition of easy. Looking at the euro now, moving from the S&P to the euro. This is the euro FX, not to be confused with the currency pair. I do not trade Forex. We can do a lot better than the Forex markets, in my opinion, with futures. Euro is extremely bearish this evening. We talked about this yesterday. Nothing really new here. We did have a very bearish bias going into today's session as well. We are, as you can see here, just grinding these lows. Now, what I noticed is that we had this spike and channel down, right? This is like a spike and channel down, right? Nice and strong move down. And at first glance, that was my first assumption was we just have a spike and channel. We'll wait for the big correction. Again, just like the S&P, we know we have kind of the base of that spike and channel being right about there. We do a lot of work with spike and channels here at School of Trade because they are very, very easy to trade once you learn how to trade them. And so we'll expect to see a correction back up, and that's where you're really going to get the best tradable opportunities in this bearish trend. But then I took a step back for a moment and I said, well, let's see if we could get a little bit more creative here. Take that low. We know that really is the main channel here, right? The main channel here on this euro is really right here. But what if we extended it out? What if I doubled it up? And sure enough, what happens if you double it up is it matches up completely seamlessly with that high, right, from early this week. So that gives me a definite area of interest right about there. Really what it ends up being is it ends up being right about this area right there. This area right here, That's really where you want to be waiting patiently to sink your teeth into, get that price to correct higher. At this point, you have to think of it this way. At some point, these sellers are going to have to take their profit. Okay, that's going to send price higher. At some point, you're going to have buyers who just can't help themselves. They're going to try to get long here, right, hunting for bargains, thinking the price can't keep going lower forever, right? And it can keep going lower, well, until it hits zero, and then I'll bet they'll figure out a way to let it go even lower than that, right? The market can do whatever it wants to do, so we're definitely not going to think in terms of it can't keep going any lower. And this is one of those situations where we look at this and we say, well, I could buy, but we know that the more consistent, the more reliable trading opportunity on this is going to be the sell. So extremely bearish, grinding these lows. Again, you could look at this in a few different ways. I honestly see this as being nothing more than one big spike and channel down. That's really what I see it as mostly. And with that spike and channel down, we know that, just like we said for the S&P, we know that we'd like to be able to wait for a big correction, preferably back up to where the channel began, right, which will be somewhere right around here, right? That's where your level is going to be, right around there, and then look for the sell back down. Again, that's the fundamental that you see on this chart. What I'm saying here now is you can't, this is just, it's way too perfect that this ends up being just a multi-tier channel, and all we've seen is the lower half of it, right? So now it ends up being a little bit easier to sink your teeth into something possibly a little bit lower here on the chart. Again, I kind of had it pegged as this area right here. So that's where we're really looking for it. Get up, come back down. And so for all you buyers out there, I definitely can't say there won't be some buying opportunity. There's a lot of open space here that's just begging to be filled with bargain hunters. But the problem, though, is what you'll usually see is you'll see it really struggle to go higher, and it can be really difficult to find the right timing on that, and then it will just, bam, just take off the downside. So what I always tell people is, if you're going to trade counter trend like that, I understand why. It's very enticing. But don't waste all your bullets. Don't empty the clip on being a buyer right now. Save a few bullets for after that big correction, because you're going to want to have them. If you do want to be a buyer right now, the best way to do it is going to be to look for areas where sellers are getting stopped out, right? Look for areas of resistance overhead. So, for example, you know that everyone's going to be selling Fibonacci levels. They're going to be selling moving averages. So just go out there, find some areas on your entry chart, right, on your entry time frame, and just look for areas where, if you didn't know any better, you'd be selling as well. And then buy right into those stop losses. Use a quick first target, tighten up the stop, and then try to hold as much as you can up to the top of that multi-tier channel. So we definitely want to be sellers right now in the euro. It's difficult to say anything else besides a bear trend right now. And I do want to follow the trend. That's where the reliable trade setups will be. But I also want to remember, though, too, that there's a lot of money to be made, well, a lot of open space overhead. Just don't waste all those bullets. And remember, if you're going to be a buyer right now, you are trading counter trend, right? And make sure you treat that trade as a scalp and do it on seller failure. So you know my plan for the euro. Wait patiently for the correction, and then really the best thing on once we get the correction is going to be to look for buyers to fail. And then, just like we said, if you're looking to sell, or if you're looking to buy right now, look for an area where those buyers are going to place their stop losses, and then just sell right into those stop losses. I want to get it up around those highs for tomorrow. So patience will be a good virtue for tomorrow's session. And this is the euro, so we may have to wait a little bit tomorrow before we get that nice high probability trade. Now, boy, oh boy, what a crazy market we've had on gold this week. It has been a very rocky start of the week if you haven't been following along at home. Remember, we came out of quadruple witching, right? All four asset classes expiring last week. We came out of rollover last week. We came out of the FOMC report last week. So there was quite a bit of rockiness out there, a little bit of choppiness in the water this week. And I think gold really just illustrates it. You don't see this very often, where we went from bear flag into bear spike and channel. I mean, literally back to back. And of course, you got to stay to the bear side now. But just like we talked about on the euro, with that spike and channel down, the best trades are going to come after a bullish correction. So put the plan together here on the gold. Gold is bearish this evening after back-to-back strength patterns on the anchor chart. Yesterday's bear flag turned into today's bear spike and channel, which tells us to stay short, and our plan will be to look for selling opportunities after that bullish correction and use the measured moves as well as range expansions for targets below. So just playing catch up here, we knew that we had that bear flag in last night's newsletter, right? So we were looking for that continuation. We got exactly what we bargained for today. Now we get that, just extreme strength. And again, it doesn't matter why. I want to purposely avoid the temptation to always be thinking, I wonder why that happened, right? Traders, we don't need to understand why. We just need to know where the highest probability trades are coming next. I could spend all week trying to figure out why these markets work. Trust me, you're not going to get the truth on the television. Okay, that's the problem. By the time they figure out what happened on television, you've already missed any opportunity to make any money on it, right? You're getting the sloppy seconds from there, and usually they are very, very sloppy and not very productive. So we see that big push down. What gives it away is that strong red candle, and then just incredible volatility there as we went down. You'll also notice here now that we've broken that channel, and we're sitting right on the top. Take that trading range, copy and paste, copy and paste, copy and paste, right? Same thing I've done for the rest of these charts this week, right? They all happen to fit into that mold except the euro. The euro is really the only one that hasn't really given us any clear ranges. You'll probably see a little bit of opportunity here around this trend line, but this is a it's a trend line that I looked at a few times. But the problem is, though, you draw that trend line on the opposite side. We overshot the low there. It's not a channel. It's not a long-term channel. That's because of the bear flag and the bear spiking channel. But you might be looking at that right now and saying, Joe, what about that channel? Well, or what about that trend line? Well, that does put us right back at the beginning. Again, spike down, channel down. We do expect a correction back to the base of the channel for the best selling opportunities. So stay focused to the sell side right now. That's definitely where our bias is right now. I'm looking for a spike and channel correction back up around that 31.5 to 32. I would love to get a little bull trap up here so the buyers try a few times, right, and sell right into their stop losses, bring it back down. And then again, make sure, assuming we do get that correction, and as we're heading back lower here, make sure you keep in mind these are your range expansion targets on the way down. And as you can see, it did get a little bit crazy today, but you can definitely see, though, well respecting there, well respecting here, and well respecting there. So as crazy as this market has been this week, and it's only Tuesday evening, we definitely see those range expansion levels of support and resistance are being respected. Then once you know how big that correction is, right, just like for the S&P, then we can go out and we can start looking for that measured move, right? So A, B, C, and then D. Guys, a lot of these spiking channels right now, so remember, the key to a good spiking channel is to wait patiently for the correction. And the correction almost always goes where? Back to the base of the channel. And it can be a very frustrating environment, because by the time we get back up to the base of that channel, you're ready to pull your hair out, right? You're thinking now the bulls are back in control now. And that's what makes this such a challenging, but if you know how to trade it, a very rewarding opportunity. So don't forget about those spiking channels we're seeing this week. Volatility comes in the form of spiking channels, flag patterns, strength. That's what you want to be thinking. And guys, don't forget, we teach all of this stuff to all of our students here at School of Trade. And I want to remind you, thank you guys so much for stopping by and watching our newsletter tonight. Make sure you download those charts and join the newsletter, of course. But I do want to remind you guys, if you have some time here, to check out our free trial here at School of Trade. Because one of the things we're going to teach you as part of that free trial, right, is all about how we trade these trending markets, range-bound markets, right, rotational markets, et cetera, et cetera. I take a lot of pride in the fact that you're going to learn more with me in my trial than you will anywhere else on the interwebs. And then while you're here, don't forget to check out our beginner, intermediate, and advanced levels of membership. You know, we've been doing this longer than anybody else on the web, guys. I've always got someone standing by 24/7 to give you guys a hand if you need any help along the way. And remember, being successful in the financial markets is just like being successful in anything else in this world. It's like opening up a combination lock. It's not enough just to know the digits. You've got to know the sequence. That's what we do here at School of Trade. We teach that sequence. You might already know all the definitions of everything, but do you know the proper way to use it every day? Guys, we help new traders launch successful careers, long-term careers as professional day traders every day of the week here at School of Trade. And I hope you'll give us a shot to earn your business by joining that free trial. I'd love to see you out there in the trade room tomorrow as a brand new student. Guys and gals, we got a busy week here in front of us. It's been a very volatile week filled with opportunities. Don't forget, tomorrow we got inventories on crude oil, range bound on crude, bearish S&P, bearish gold, bearish euro, and of course, you know we're going to be doing it all tomorrow, 8 a.m. Eastern time when we open up that live trade room. My name is Joseph. Thanks so much for tuning in. Don't forget to send me some feedback on this. Either post your feedback below the video on our YouTube channel or send me an email. I'm jj@schooloftrade.com. Be well out there, be nice to each other, and be sure to come back and see me again tomorrow, 8 p.m. for the nightly newsletter tomorrow. My trade room opens up at 8 a.m. Eastern time. I'm out of here. Adios, amigos. Bye-bye for now.